All right, what is going on, Discord, YouTube family? Welcome back to another edition of Market Review with me, T. Hobbs. Today is Thursday, September 25th, 2025, year of our Lord. And of course, we will be reviewing the S&P 500 ES futures contract, the Nasdaq futures contract, and YM. And I'll take a look at gold and RTY as well, because we do trade those in the Discord. And yeah, then we'll get you guys out of here. So the plan for the week, the top-down analysis this week, right, was, if you guys remember, the thumbnail that I put out was like, hey, we're very, very bullish. You know what I mean? Bulls are in control, right? And that's how you should be until proven otherwise, right? Every single time I put out a market review, or a top-down analysis, my analysis is always based on if then this, right? Thus far, for the last 2 years, it's been, if the bulls defend, we do this. When the bulls defend, we do this. But as of Thursday, I am proud to finally say the Bears have finally defended, right? They have finally come to play, and they have one more level that I can clearly say the market is turning bearish, and it looks like the Bears are taking over. And that's the 66.11 level. So just taking you on a little bit of a road trip from the top-down analysis. Sunday, September 21st, we talked about if we were going to be bearish, we wanted to see the market trade up first. We got exactly that on Sunday, right? On Monday, we consolidated at the close. We rallied up here and we stayed up here. From there, we pushed down on Tuesday. We failed on Wednesday. On Wednesday night, we dropped lower, and turnaround Thursdays, they tried to turn it around, and it was this candle right here on the 4 hour where we took longs going straight up here. I said, hey, we going back up to this yellow box, weekly fib, previous day low. And then after that, hey, Godspeed, I'm out, right? I'm only taking longs up to there, right? Nice clean move off the lows up here, straight into the weekly fib. And now bulls are failing to push price higher. If I want to continue to be a bull or bear, this is what I want to see, right? I want to see them fail. I wanted to see them consolidate at the lows. I want to see them not trade back above this macro here. And we're getting all of that. So I just wanted to give a little public service announcement about the current state of the top-down analysis. And again, if the market is going to go down, what levels did we talk about? We talked about our weekly projection of 6,600 and maybe even lower if the volatility gets growing, which is starting to increase. Is now holding steady above the 18s. The next level is going to be those 19s, in my opinion. All right, that being said, let's jump right into the pre-market plan for the S&P 500. And we can look over here and we can say, okay, everything that we talked about, did it line up with what we did? Did it line up with what the market actually, what actually transpired in the market? Well, let's double check. The conditions, we were in the markdown phase. We were bullish as long as we stayed above 66.11. Did we stay above 66.11? Yes, we did. Did we buy the market down here? Yes, we did. Bearish below 67.05. Did we stay below 67.05? Yes, we did. Was the market continue to be bearish? Yes, it was. Bears finally defended the highs and now appear ready to bring price into the September 17th range, which is right here on Wednesday, September 17th, where we should find buyers, or you should see buyers defend inside the wick from the 17th. This is all written out pre-market. We go through it an hour before the market is open. If you're interested in joining the Discord, the link is in the description down below. I want to make myself very clear for the trolls in the chat. I don't ever need you to join the Discord, but I will never offer a service for free. My service represents my blood, sweat, and tears, and time away from my family to teach it to anybody that wants to listen. I will charge for that, and I won't apologize for that. But moving on. If I want to look to play the retrace to the upside, unless we get a bounce at the open, in which I want to participate in the stronger downtrend. We did not get a bounce at open. We got continuation at open. So there was nothing for me to do until that candle was finished. Key note, drawing a fib on the 4 hour of the September 17th candle will give you the range that we are about to trade into if we're going to trade down. Well, we drew that fib, we traded right into that range. Now, chessboard high. I spoke about this and I said, we're probably not going to see this red box today. But if we do, I'm looking to short 67.19 through 67.06. I also talked about this blue box up here. I said, I have a plan up here, but I don't think we're going to see this level. And we didn't, because it didn't really make any sense for price to come up here. I said the levels that I'm paying attention to are this orange box and this green box here, right? We're going to talk about that. Our overnight range, 67.0525 through 66.95. Our low, 66.83 through 66.7125. We talked about breaking below this range and looking for a break and retest of this range. Well, knowing that we're looking for a break and retest, however far this candle goes, then that means that we can also play longs up to this level, anticipating this level pushing price back down, right? And where would that come in at, you say? Well, when we drop down to the 5-minute chart, I'll show you exactly, but the plan was to look for buyers to defend the 5-minute fair value gap / 50% of the September 17th wick at 66.42 to 66.33. We can look to long the market targeting the previous day low and the daily fib if we got stronger, okay? So now, let's take this off of the charts, right? Let's take the pre-market plan off. Let's go down to the 5-minute and let's take a look. I got long 66.33, just, spoiler alert, right? We come down here, right? And we look at the 5-minute time frame, right? I'll just turn everything off my chart so you guys can see exactly what I'm talking about. You look right here and there's this little gap in price. Now on other instruments, it's a lot stronger, right? It's a bigger gap, but this is where I was talking about the market potentially defending. It's the only inefficiency that was left once we dropped below the previous day low. And when we come all the way back over here, what time did we come here? Right at the close of the 950 candle. As soon as I saw us trade down into 930, I alerted the Discord. I said, hey, we're trading down into 930. This is bullish. I just want to see the 4-hour candle close, and I'm looking to get long. We trade live, but I do not share my actual execution screen because I still do not want to dig, or I don't want to share that. I like to keep it personal, right? Maybe in the future, that'll be something that I offer, but right now, this is where I am in the level of my journey in regards to sharing my screen, okay? We come down to the lows. I get long on this first candle, 66.34, right? Stops below the lows. The market pushes up into target. I collect 10 points out of the trade. We came down. Oh, I'm sorry. I took 2 trades trying to long this early before I said, no, I'm going to be patient. 1 contract, lost a few $100, not a big deal because I knew I was in the right area. I just had to be more patient. So once I became more patient, I got that money back and then I doubled my size and I got stopped out again right here. So I lost that money. I finally got back on the horse and said, no, I'm pretty sure this is the right area. I'm just going to wait until 10 o'clock. 9:59 hit and I got long again at 66.36. Put my stop back at this low. Took this up for, I think we got like 14 points or 11 points or something like that. Finished the day green, up 11 points on the day on 2 contracts on the S&P 500. And then the market ended up trading all the way back into the weekly fib. I was done with the market at that point. My job was finished. Set through a little bit of drawdown on the day, but still had a great day. Now, let's get to the reasons why. We come down to the 1-minute time frame, right? I execute on multiple different time frames. I prefer the lower time frames because I can see the development of the structure, right? We talked about the sequence of price. We said this morning, we got our first tap here. I said we got our flip here, and I was looking for the liquidation and then the double bottom. That's exactly what we got. I traded the liquidation long, right? Got stopped out for small profit or nice profit, came back, and then I took the double bottom or the 5 in the sequence, right? If you know what I'm talking about, you know what I'm talking about, right? And then we rally, and the target again could have been these highs up here. I didn't hold it for that long, and I'm comfortable with that. If we continue to look at the time, what time did we trade down into this area? Right at 9:50, going on 10 o'clock, boom, the market took off. Very nice, clean trade. We get up here at these highs, and now we're inside of the macro that I created myself, or an area of interest or time of interest that I created myself. In this level, the market broke the structure. We broke this low, which means if we're going to flip back bearish, we still need to trade back above these highs to change the character. If we trade above these highs and we still can't trade higher, then the next time we're coming down, guess what the target is? All of this, because now these lows did not produce a new swing high, right? Instead, they actually produced the market going the other way. So now we get the market to push all the way back down into the PM session. We break through these lows, we crack through that 5-minute fair value gap area that we talked about, and now we're creating new dealing ranges that are lower. And if the plan is to go lower, you don't want to see the market trade above this 110, 140 macro. Lately, that's been the theme. We return all the way back up to the 110, 140 macro, but we can't trade one penny, not one tick back above it. And as long as I'm continuing to see that, I'm going to want to continue to be a bear. But when I trade in the New York session, I'm going to trade as a reversal trader. If I wake up and the market's down 1%, I'm not looking to participate in shorts in the market. I'm instead waiting for the market to fizzle out, and then I'm looking to return the serve back to the upside in the New York session because there's gold in those hills, right? There is money to be made on the downside. I'm not saying you can't, but I'm a reversal trader. I'm not a continuation trader. I'm not a momentum trader. I'm a reversal trader. If the market's given an opportunity to reverse it, I'm going to reverse it. All right. So those are my thoughts on the S&P 500. That's the review of the pre-market plan. Again, given out every single day, an hour to 2 hours before the market, discussed 30 minutes before the market, and verbally talked about live as we traded, right? In Q, how did it play out in relationship to our pre-market plan? Because we had such an aggressive sell-off, I told the Discord members, hey, open Q&A. Let's ask some questions because I know you're kind of worried about how this is going to play out, right? Because you may not have a plan because of how much we dipped. Me, I always got a plan because I've seen a lot of these scenarios, right? So I said, okay, 4-hour fair value gap. If we cannot get buyers to step in here, we're going into the Fibonacci retracement of the September 17th candle. We take the fib, we fib out the entire candle. And what did I say? 30, 50, 60, 70. Golden pocket being between 50 and 61%. The ES traded all the way back down here. The Nasdaq, I said it in the shop. I said the Nasdaq is going to be the more bullish of the three. So don't expect it to dig too deep yet, right? It might run this, absorb all of this liquidity, and then hold. That's exactly what it did. It held 30%. And it never swept this low again. It held this all day. ES is not as bullish, and it just didn't hold it. So as far as like which way I'm leaning on the Nasdaq, it looks way more bullish in my opinion than that of the S&P 500. It looks a lot stronger. So maybe the S&P needs to trade down a little more. The Nasdaq consolidates, and then we go back up, or the S&P, as I'm speaking, may actually be revving back up to get back above those highs. But for now, ultimately, the message was clear, right? The bulls were liquidating. I mean, the bulls were liquidating. I don't think the bears are fully in control just looking at the monthly time frame, right? But I do believe that they're liquidating in preparation for either turning this market around or getting ready to go back up. I don't know, nor do I really care. And honestly, you shouldn't either. It's a talking point, but it shouldn't be the thing that you do because you're not a swing trader. You're not trading and holding trades for a month. I use that to get my analysis. But as far as how I'm trading on this time frame. So it is what it is. Anyway, what did we get at 950? We traded down into 950. Right at 955, we got a nice doji candle and a retest of that candle at 10 o'clock. This is an easy money buy right here. 22,445 take us right above 589, then keeps pushing all the way back to the overnight chessboard low. We even pushed into this range here, which I was shocked by, but we did come back to 550 price, which is basically London's a good level for London, right? A good time frame for London. We got exhausted up there and then started to trade back down. Now, the 1 o'clock high was not able to bring a low, and I would love, if I'm going to remain bullish, I would love to see this low get above this high. If I'm going to remain bearish, they'll fail here, and it's back to the races to the downside. We'll chart all of that when it's all said and done, but these are things that I'm watching going into the future. We go over here to RTY, right? RTY, we talked about it being the more bearish of the three, right? And it potentially trading into our weekly projection. That's exactly what we did. As a matter of fact, our lowest weekly projection for the week was 2410.1. We traded all the way into 2412.2, 2.2 points away, right? And I specifically said, watch out for weekly settlement. It should be a level that the market pushes back into. The only thing I got wrong about this analysis is that I underestimated how weak it was. I thought that we could at least push from this level back into 2439.6, and yeah, that didn't happen. It failed at 2436.2, give or take, and now we're consolidating at the low, which again is not bullish. It's very, very bearish. As long as the market cannot get back above this high, I would look for more continuation to the downside going into tomorrow. We go over here to the Dow Jones. Again, it's like I'm on repeat because we keep seeing the same thing. As long as the bears continue to put pressure and hold price above the previous session, then the next session has a job to do. It's either going to break the trend or we're going to continue going down further and further and further. But Dow Jones, one of my favorite things to trade. I didn't trade it today, but I really love this because it usually does exactly what I wanted to do. We trade down into 950. We trade right back up into the previous day low. Tap settlement like a kiss. We kissed it right at 445. That's exactly where settlement was. We broke structure, came back up, retested the chessboard low, right? Tested it one more time for a third tap, and then boom, right below weekly settlement, right to the low of the ADR, which is the average daily range. Target would have been 46,114 on the day. It hit it right on the nose. The only thing left for it to do now is continue to the downside, targeting 45,973 and 45,815, which in my opinion, they might just do that tonight, in which case I'm cool because I'm very light on my trading on Fridays anyway. So moving over to gold, it was a golden child, no pun intended, but it basically traded right off our levels, right? Like perfectly off our levels. We had the overnight trader shop high, the overnight trader shop low, and then our chessboard low that was left behind from the overnight session. Something in me when I woke up this morning said, man, you should just put a limit order at 37.54. You know we're coming back to fill this gap. We just might play around first. I didn't. I was focused on the instrument that I was trading, but ultimately gold is chopping its way down, trying to pull back, and it's doing a good job of it. But if the 1 o'clock level holds, this dealing range here, if we can hold above the 63s, then I actually like gold back to the upside tonight, right? So we'll see exactly how it works. But as long as this 1 o'clock price continues to bring new highs above 3 o'clock, then I like gold transferring power back to the upside to close the Friday on a bullish note. Plus, we still have the bullish weekly projection up here. We hit it once, right? We hit it once. I'm anticipating us going back up there and closing up near that level for Friday if the bulls can hold court down here at these lows. Anyway, ladies and gentlemen, I hope this has been helpful. Again, this is a market review. Like I said, we do this every single day. Pre-market, I'm not always available to do a market review, but when I am, I try to be extremely thorough because I know that these reviews can help you along your journey. If you're in the Discord, please don't hesitate to DM me. I do private calls all the time. You know what I mean? Only thing I ask is that you come with something in hand. Please don't come to the private calls empty-handed. I really want to see executions. I want to see your journey. I want to understand where you are in that journey. I want to understand why you're taking trades, what you're looking for moving forward. What is your plan to be better moving forward? These are things I want to talk about because I'm not here to give you the answers. I'm here to give you support along the way of your journey. That being said, if you're out in YouTube land, like I said, the Discord link is in the description below. We're small for now, but I guarantee you, 2026 will be a year you wish you could have gotten this Discord for $40 a month. That being said, my name is T. Hobbs. This is the Market Review, and I'll catch you guys on the next one, man. Peace.